Hello, this is Jenny Clark with Solvability, and I was talking to my friend Mitch the other day. He's actually a client, but we're working together on a number of things inside his business and financial systems. And he has certain questions he's always asking me. And this morning when he called, he said, Jenny, why does loan renewal always come at the worst possible time? Well, if things were easy, you wouldn't be doing this, right, Mitch? You like the challenge. You've had your company for almost 8 years now, and you've got the traction in it, and there's always going to be some ups and downs, and we're going to find a way to work through this. So Mitch, as usual, is a bottom line guy. He says, Jenny, I just want it all to work. What do we need to be doing? And in this case, he's asked me three different questions, and I'm going to go through them one by one, some of the discussion we had. So Mitch's first comment is, we've had that same banker and line of credit for years. How come we need to submit all this paperwork again? He's right. It's a big hassle, lots to go through. If we're making all this money, then why are we always up against a line of credit? Cash flow. That means you may not be as profitable as you are, and you're not able to financially generate the cash from profit that goes back into the business that generates growth. Mitch's third question is, how is it we've got all these taxes due, but there's no cash available? Mitch is looking to find out, where is that hidden money that we made so I can go pay my taxes, because it should be here, right? So we'll talk about that too. So let's talk about, we've had that same banker and line of credit for years. How come we need to submit all this paperwork again? So banking is a very highly regulated business, and they have to be able to show what their processes are. They've got several people involved in it. There's the banker, there's underwriters, there's the loan committee. All of those people are involved, and the way they operate is not off a handshake anymore. We've got to make sure those documents are up to date, which really means we have to create a process for knowing what the bank needs, when they're going to need it, taking a look ourselves at when the bank line of credit is going to be up. So we've talked to them about it, and we've talked also to some other potential bankers about what our options might be. So we're always in a we're prepared mode. If we're making all this money, then why are we always up against the line of credit? Well, you're making money, but you're growing. That growing sucks up a lot of cash. Every time you onboard a new contract, you're bringing people onto payroll, you're paying them for 30 to 60 days before you can even invoice. You also have to be able to pay for their increased payroll taxes, their increased health insurance. It sucks up a lot of cash. You've got to be thinking about that. And as far as always up against the line of credit, you should be getting to the point where you're increasing your profit with every new contract that comes on. And here's what I mean by that. You've got your fixed operating cost of the business. You don't change that cost every time you add a new contract, because usually you just onboard the people you've got. Yeah, there's a certain amount of surge activity for yourself, human resources, the program managers, the accounting department to onboard it initially, but you don't have to hire usually to do that. You don't have to increase your fixed cost in order to do that. That's the whole point. You should be getting increased cash flow because you're billing more and there's more profit in those contracts, because we've gotten so much smarter about how we bid it. If you're always up against the credit limit, we want to analyze and find out what's going on. It could be that some of your collections are coming in slow. It could be your invoices are being rejected. It could be that turns out contract you thought was profitable isn't profitable. And we've got to work around this, because you're always going to be growing and you're always going to be up against the line of credit unless you address certain things. Sometimes people have to kick some money to the company. Sometimes they have to take on additional partners. We don't really want to do all that before we figure out what is the cause, what's the root cause, and how can we address it, what are our options. Mitch's last question is, how is it we've got all these taxes due but there's no cash available? Okay, so your financial statements as a federal contractor should be on accrual basis, because that would make them compliant with GAAP, which is generally acceptable accounting principles. GAAP requirements say that we want to have we want to match the income and the expenses to the accounting period it belongs to. So what that really means is when you're doing your billing at the end of the month, and it includes sub cost of $50,000, there should be $50,000 in expense in your current income statement. If you don't record that $50,000 until next month when you pay it, you're really not getting very accurate things. It's like, this is like keeping score just like you would if you were watching a baseball game. You got to know how to keep score. So as far as where's this tax, where all this money is, it's never in cash. Everything that you have that goes back into your company is part of what's called working capital. It's your float. It's the difference between what you've got on the line of credit, what you collected in cash, how you use that cash to pay off your subcontracts or your accounts payable, how you paid payroll. So the building up of working capital includes generating profit that increases that working capital. So if you have a profitable company, you're going to be a lot better off. You need to know exactly where you are, determine how you're going to bring in the right amount of profit on a monthly basis so that you do get what you're trying to get out of and have the cash flow to pay these taxes. The other thing we probably should be doing is doing a cash flow forecast and update that every month. We can usually see about 6 months out, not much more, but what I'd want to do is put those big annual payments, the whopper ones that you want to think about ahead of time. Could be that one for workers' comp. Every time you renew it, there's a chunk of money needs to go out. It could be when you're paying profit sharing money, or the first month of the year when you're paying in federal employment, state unemployment. Those kind of things that you pay on a cycle need to be on your overall statements. So Mitch says, Jenny, I just want all this to work, and that's why we're working together. Mitch is unstoppable. Are you unstoppable? You know where you want to go. Solvability can help you get there with the cost and pricing intelligence you need to accelerate and scale your business. Most of our clients get started with our free wrap rate calculator. You can go to our website at solvability.com. That's S as in Sam, O-L-V as in Victor, and the word ability.com. If you got something more important, you've got a bigger project, something more urgent, how about just send me a text, area code 256-882-6276. Let me know your name, your company name, what your issues are, and how you heard about us. And let's set up a call. Let's talk about what we might want to be able to do together.